in the property scene, we see a lot of people sometimes going with the get-rich-quick schemes. And as you know, at Wealth Enhancers, we're all about get-rich-slow. Why did you start with that strategy? Why did you go with the nice, like, there's a lot of opportunities, you get to see things all the time, but you actually chose just to go conservative, nice long-term strategy? What was the reason behind that?
So look, it all started off with my first property that I bought. So I was trying to find, I had a good background and grew up in the UK, and so I wanted to live in a nice place. And so I lived in something that I wanted to live in as a professional, and I worked out that a one-bedroom unit I couldn't really afford, whereas a three-bedroom house I could, because I could rent 2 rooms out to 2 mates, and the rents then were like 12%, which was amazing. So I got into a good part of a good suburb, and then I made like $20,000 or £20,000 overnight. And so I thought, this is good, and I did the same next year. And again, we had 3 professionals. They'd be from like Price Waterhouse or Deloitte or something like that. And it's professional people, they've got good jobs, they've got wealthy parents, they want to pay the rent because otherwise their bosses find out they lose their job. And it was just a really basic logic like that kind of worked for me, and I carried it on for the last 20 years. So these days I know so much more than I did at 22, but I actually got pretty lucky at 22, and I picked the right kind of strategy. It's
smart. I think that's a big thing that a lot of people forget about with property. There's obviously the capital growth, which is important, but you also need the income to be able to fund the mortgage repayments. And I think we see it in ski towns like this, for example. They're factoring on a certain occupancy rate, and often it doesn't come, and then you've got cash flow problems. So that blue chip suburbs really provides you security, doesn't it?
And the capital growth goes with it as well, because it's not volatile. So in the GFC in the UK, there was the mortgage rates went from like 7 or 8% down to 1 or 2. All of my friends still had jobs. They could suddenly technically pay their mortgage off in a quarter of the time. And so even though no one could get a mortgage, there was no repossessions because no one was selling. Whereas if you went maybe, and so I was 20 k's from London, if you went 25 k's to a place called Luton, it was all commission housing, students, that might have been down 30 or 40% because those are the people that are affected when the economy's in trouble.